So hey, my name's Dave Nangle. I'm the CEO of VEF, and VEF is an investment company listed here in Sweden on the main board, and we've got a mandate to invest in fintech across emerging markets. We currently have an NAV above $400 million and a market cap of about $250 million, and we've been existing for 8 years now, successfully investing in some of the biggest and best fintech companies across scale emerging markets, everywhere from Turkey in payments to Brazil in credit and Mexico in small business lending. We're backed by some of the biggest capital providers in the world, both here in Sweden with household names like Robur, but also internationally with funds like Fidelity Wellington, who give us their capital to invest in our mandate successfully over time.
Today at Pareto we have an event how to invest in fintech in Brazil. Why did we decide to put this event up?
Why? Well, one is because of the opportunity. It's one of the biggest opportunities in fintech today in the world. We think Brazil is the #1 fintech market for many reasons, mainly to do with scale and long-term potential, but also because of the exit potential in that market, the value to be created, and the regulatory support. But two is because we at VEF have put our money where our mouth is. We have 6 of our 17 companies in Brazil. We have over 60% of our NAV in Brazil. So a lot of our shareholder capital has gone into that market and opportunity. And we're very happy to present that story here directly to the Swedish investment community and also bring some of our best assets like Creditas, Sergio Furio, the founder, and Finanzero, Ulla Wyden, the founder. So we're bringing not just our story to the investors as per usual, but we're bringing them directly, the founders from that market, to meet them here today, which is very exciting for everybody.
Yeah. Speaking of financial markets, we have seen a shift in markets. People are looking for profitability rather than growth.
Yep.
How do you tackle this?
Yeah, these things shift over time. People have a bias towards growth at some points in the cycle and a bias towards safety and profitability in other. Effectively, you need to balance that. And I think a lot of the companies in our portfolio, and you'll hear from Creditas today, are one of our more mature, later stage companies. They're balancing both growth and profitability. So as opposed to back in 2020 and 2021, when they grew triple-digit percentage growth, but were burning capital in a capital-rich environment, today they slow down growth to a more sustainable 30 to 50%, but reaching profitability, break even. So you get both worlds, or the best of both worlds. You get growth on one hand, but more sustainable compounding growth with a profitable bottom line. And that's very apt for this point in the cycle.